Good afternoon, outliers. Sorry, I got distracted by the Discord. How y'all doing today? Good afternoon to you. Happy Wednesday, right? That's exciting. We're already halfway through the week. Don't forget, after this Friday, I'm out for 2 weeks after that. So we will not be having trading rooms during those 2 weeks. But up until the meantime, we're going to do our very best. Yorn is here. Good to see you, Yorn. Okay, we have something really cool to show. All right, so let me show my screen. I teased this in the Discord earlier, and I said, hey, outliers, a discovery has been made. I'm going to leave this here. I'll share more with you in the trading room this afternoon. Can't wait to share. So, hey, Goran, I saw your message. That's what distracted me at the very beginning. Dude, I do put options. I do put options every chance I get to. We just didn't have any set up. So, oh yeah, dude, for sure. Goran, Yorn, since y'all are here, let me be the first to show you the new OVTLYR Breadth Indicator. Now, this is so preliminary. Mahesh sent me the data. I got it. I got access to the data this morning. I ran my spreadsheet like what you see right here, and I found the coolest stuff. So you guys, well, Yorn knows, Goran may not. I used to trade using this market breadth chart. So this is the MMFI. This is the percent of stocks above their own 50-day moving average inside the S&P 500. So when it's at 42%, that means 42% of stocks in the S&P 500 are above their own 50-day moving average, and 60% are not. So this was a chart that I traded with for a long time. And there was a hot minute where we weren't doing anything at all. And I was frustrated. Yorn was frustrated. Everybody else was frustrated. And I'm like, listen, market breadth is just not there. I'm not trading, period. And so I did some back testing, and I found that this didn't necessarily correlate to the right trades for, or the best trades with OVTLYR. So over the last couple of weeks, and I've mentioned this many times, is watching how many stocks are on the bull list versus on the bear list. And multiple times, over and over, I said, look how many's on this list, look how many's on that list. And watching it change from one to the other. Yarn says it looks sweet. Brian's here. Good to see you, Brian. Watching this change over and over. And if you remember, there was a point where I said last week, I said something like, look at how big this is. The bull list has basically come to a screeching halt. I think we are due for a pullback. That was this day. That was literally this day. I can prove to you with an email I sent to Mahesh that morning. I said, hey, Mahesh, I think we're due for a pullback. Shabam, that's about to happen. Now, that was just me just observing these bull and bear lists here, right? Now, it's not necessarily that the bull and bear list is a magical number saying, hey, if this many's on the bull list or this many's on the bear list, think of it conceptually. If everybody has the opportunity to buy, if everything has a buy signal, what's left? If literally everything has a buy signal, if literally everyone has bought in, if literally all the buyers are there, what's left to do is sell. It's exactly what we saw, exactly what we're seeing. Hey, Jean-Louis, glad you're here. And I wanted to quantify that. So I reached out to Mahesh. And I'm like, I just want to download. All I want to know is how many stocks are on the bull list each day, period. That's all I need. So he sent me the data, and this is what I came up with. And the insights in this are crazy. So first off, blue line is the percent of stocks on the bull list. Okay, so let me edit this slightly. This is the percent of stocks on the bull list. Mahesh and I were both murdering it this time. We had win streaks, and you had win streaks bigly during this time. And I was like, man, this is really good. Seeing all these win streaks right here. And then the number of stocks on the bear list started to climb, which correlated to this move right here. That was on May 16th was the peak. May 16th is this candle. That was the peak. That was the most number of days that were on the bull list, or the day with the most number of stocks on the bull list. And at that point, the number of stocks on the bear list started to climb, right? They're either on one or the other. They're either on the bull list or the bear list. There's no in between. And that was literally days before the market has peaked. Now, a couple other things to note while looking at this. Does this not remind you of the RSI indicator? I was showing this to Mahesh earlier. And I'm like, Mahesh, this is just like the RSI indicator. Look at this. With the RSI, it's considered overbought or oversold when it gets to extreme levels, right? So like this is an extreme level. These are extreme levels. And then you look at this number, it's exactly the same. How does it do that, right? That was not intentional. When it reached over 75%, very quickly reversed. When it reached this 25% level, very quickly it reversed. Again, right here, very quickly it reversed. So I'm telling you, we have something special here. So we are going to build this into OVTLYR. It is coming in the next update. I don't know when, but hopefully in the next few weeks or so. Then I was like, well, how do I trade around this? And Mark, so real quick, that's Mark, that's Mahesh. This is their brainchild. We were on a call this morning, and Mark was like, Chris, I don't really like these moving indicator or moving averages here. I don't know about that. And so what we came to an agreement is we're going to have multiple moving averages. So you can decide where you want to put it, which is going to be kind of like a MACD indicator, right? So think of MACD, where MACD, the blue line on this particular MACD is the MACD line. The yellow line is a moving average of the MACD calculation. And when there's crossovers, that is a buy or sell signal for a lot of people. And so you're going to have the ability to manipulate this to have the 5, 10, 20, or 50. So you can decide where you want it at. And I was just looking at this earlier and I'm like, well, okay, what if I start with a 10? I always love the 10 EMA. That's kind of my thing. Got that from Steve Burns. And I was looking at it and I'm like, okay, so this crossover happened around April 25th. All right, let's take a look. April 25th was right there. The SPY didn't start trending higher until May 3rd. And then we were on a win streak. That was when we had May 7th was when we started putting on trades. May 7th, 8th, 9th, 13th, 17th. That was when we started putting on trades. Of those trades, that was 10 trades. 1, 2, 3, 4 were losers, 6 were winners. But of those 10 trades, we actually could have skipped. Which ones we have skipped? SU, the last one that we put on. We could have skipped that one because that one came on 5/22 when it had already crossed back down. And the 17th we could have potentially even skipped, which was WMB and Walmart, the other two losers, because not only had it peaked, but it had started coming back down. Now, a little way trading around RSIs is, trust me, I learned this this was one of my very expensive lessons I learned. I'll never forget. So it was one of those times where the market, I forget what year it was, probably 2016, 2017, 2015, something like that. It was just going up and up and up and up and up all the time, every day. And I had heard of RSI and I'm like, oh, okay. So when it gets to this oversold or overbought level, that's when you start shorting it, right? Well, you can see right in this example in 2024, that's not the case, right? It may get overbought and then continue on. That's exactly what happened to me. So you don't start shorting it when it gets to this level, right? Maybe you start taking some trades off. Maybe you start saying the market's overbought and looking for a correction, which it eventually did. It took a little while, but it did work itself out. And so the same, in my opinion, would fall the case here, right? Maybe once we reach like a 75 level or so, we start pulling back on trades saying, maybe we don't take any of these, right? But we could have skipped the last 4 trades. And had we skipped the last 4 trades, that would have left us from May 7th to May 14th, 6 trades in a row with one loser and one really big winner, right? MTG, YPF, JEF, IFF, JCI, and NRG. All those were winners except IFF. So I think we're onto something. I think we're onto something. So this is how I'm looking at it preliminarily is when the bull list percent crosses over the 10 EMA, I'm looking to go long as long as the market agrees with that, right? We want to have confluence in market breadth and market trend. And I've been waiting for a while to have this, so I'm really excited about this. Confluence in market breadth and market trend. When the market breadth sells off like this, then that would be a point where I'm not interested and I can wait on the sidelines for a couple weeks and then try again. But it was almost a 1-for-1 correlation between my winners and how this reacted around the 10 EMA. So I'm so stoked about this. I can't describe how stoked I am. Brian says we can trade in between guardrails based on the direction. Yeah, exactly. We can exactly. Then he says, I joined late. Is the public sentiment data included here in place of RSI? So what this is, Brian, is this is the percent of stocks on the bull list. So it is that public sentiment data, right? That is the investor behavior. When people stop buying and start selling on the investor behavior, that would be a time where if we're going long, just sit out, right? So let's go through this exercise. There's not going to be any trades today. Why? Because there's 4 on the bull list today. Of the 4, that one's under $1 million, so I wouldn't trade it. That one's under $1 million, so I wouldn't trade it. And this one's red, and that one's white. So I don't have any trades to make anyway. Brian says perfect. So let's go through these together. And let me see. Let's actually. Here's what I want to do. I want to find one that just closed. So like, let's go to the. Oh, hang on. Apple was right there. Let's go look at Apple. Just a moment, please. And hopefully we do get this sped up soon. All right, let's go look at Apple. That's what I want to look at. So Apple just closed a buy and sell position here. I want to look at the performance summary first, make sure that's positive. 116%. I would say that's positive. Let's go zoom in to the last year. In fact, let's just hit the 1 year button because this is approximately 1 year of data right here. And then let's go to the SPY. And we want to make sure the SPY is trending in one direction, Apple is trending in one direction, and we got the buy signal. Oh, let me refresh that. We got the buy trending, Apple's trending, buy signal, and market breadth all together. So let's go look at June 14th of last year. June 14th, buy signal right there. On this, or not SPY, I'm sure I shouldn't say that. Not a buy signal. That was a positive trend in SPY. Pulling up a second trend spider right here. So we're going to have Apple. Go to June 14th. Oh, right there. Looks like I had some notes on here. As you can see, also a strong buy signal right there. Market breadth, June 14th of last year. Right up there, yeah. Now, it didn't last for a long time. That was pretty close to the top, if not the actual top. And then it pulled back after that point on the market breadth. So that could have been when I put on and then waited for another couple weeks until we get to about July 14th. What around July 14th? September 1st? Nothing July 14th. So what is this? August 31st. All right, so this would have been trending higher. We got an August 31st buy signal. Let's go look at that one. If you were quick, you could have made a little money on it, but it did go down after that. August 31st. Yeah, the whole market did that. I remember that. Let's go to the next one. November 7th. November 7th would have been positive, but running up into this upper band here, so you'd know that you don't want to get too heavy. November 7th, right there, that would have been a strong trade. And then on the SPY, same thing here. So either way, we could continue to do this for hours and hours, because I could totally do this for hours and hours. Hey, Michael, glad you're here. But the point is, I'm really excited about this new indicator. I don't know when it's going to come, but you can absolutely start building this yourself just by getting the number of stocks on the bull and bear list each day, because that's all it is, with some moving averages around it. But this should be coming somewhat soon. But don't worry, in the trading room, like we're going to do right now, I'm going to be using this as part of my trading plan. Like I had market breadth for ages and ages, but now we can incorporate the investor behavior market breadth. Investor behavior market breadth. That sounds pretty cool, because that's exactly what it is. So that's going to wrap it for today. I don't have any trades to put on. I don't know when I'm going to have trades to put on, but I do know right now market breadth is very, very weak. And I would not be surprised whatsoever to see an even stronger pullback. I mean, we're under the 10 moving average right now, under the 10 EMA, which I'd said a couple of days ago. Have some hesitation right here until the market really decides that it's ready to go back higher. And we'll know, because more stocks will be moving over onto the bull list, which will be a leading indicator for this. So this is going to be awesome. That's going to wrap it for today. One more reminder, I am out starting Friday afternoon until June 17th, and then I'll be back, and I will see you on the other side. Brian says, you're here this week, but not next week. That is correct, my friend. Friday afternoon, I'm out, and then I'll see you June 17th after that. Y'all have a great day, and catch you right back here tomorrow. Talk soon.